I hope that you managed to have an absolutely amazing Thanksgiving. But I have to admit, I missed everybody. So I took the week off last week and did not record a video. So here I am back this week. And again, I hope that you had an amazing Thanksgiving with family and friends. And, I have to say, one of the great things about Thanksgiving in general, or just holidays, right, is it gives people an opportunity just to come together. And for me, it was awesome. I got to meet with several different friends and meet new people and people we hadn't seen in quite a while, people from different areas of the country. And it led to some great conversation, general conversation. And as is typical whenever I'm anywhere, talks of the housing market naturally come up. And it was amazing to hear the different viewpoints from the different people that I met with. Again, very general conversation, but everything from, man, the market to me seems like it's stabilizing, to, oh my gosh, we are in so much trouble. We are going to crash next year worse than anything we saw previously, to, interest rates, even though they're coming down, they're still making things difficult. No one's buying, no one's selling. This is going to happen. That's going to happen. And it's just like the media, really. There's just lots of different opinions out there. And the honest truth is, nobody knows for sure what exactly is going to happen. But I will say, one of the things that came up in my conversations with people last week was the number, or the most common thing to come up was the number of people talking about what the impact of a recession is likely to have on the housing market. I thought it was great. And since so many people brought that up, I thought it was a great topic. And since so many people brought that up, I thought I'd make it the topic of this week's video. So let's dive into that right now. All right, first and foremost, I found this article. I'm going to share my screen with you here. I found this article in Forbes magazine that talks exactly about this. And the idea behind it is there were two different viewpoints. One was housing was teetering on the edge of collapse as it is right now. We all know that prices ran up very, very quickly. Affordability came into question, especially as mortgage rates climbed. And what goes up must come down. So therefore, we must crash. And on the other side of things, there were people talking about, well, the honest truth is that in many of the past recessions, housing's actually what brought us out of a recession, except the last one, 2007, 2008. So they said, but this time, we actually could see strengthening in the housing, making a recession, or the impacts of a recession, not quite as painful as they may otherwise be. So again, lots of different viewpoints on what could or might happen. So anyway, let's jump into this Forbes article as it brings up some great points. And I want to go through it with you here. All right. So one of the things here in this Forbes article, it says, even a recession will only help home prices so much. And it's kind of interesting because one of the trains of thought is that if the economy goes into a recession, it's going to cause even more downward pressure on housing. The other idea is that it won't, and housing is actually going to help the economy recover even faster. And there's a couple of points here a couple of things here that I want to point out that he talks about. And one is, there's millions of people that haven't been able to buy a house because the incredibly steep increase in home prices was then followed by an incredibly steep increase in mortgage rates that made things unreachable. So what would a potential recession do in order to help that? As he says, house prices rise over time, not always in a straight line and sometimes with reversals, but they do tend to go up. In the last few years, you could say that instead they have hitched a ride on a rocket booster. Below is a graph from the Federal Reserve Bank out of St. Louis. Now, this is an interesting graph right here. This goes all the way back to 1965. I realize that's kind of difficult to see, but it's showing the trend of home prices over time. And here's where we hit the Great Recession, 2007, 2008. You could see home prices spiked. They dropped off quite a bit, and then we started up again. But since 2020, which is this point right here, this right here was not expected. It's unprecedented, which is exactly what the article goes on to say. It says here that the period from the start of the pandemic in 2020 to the present is unprecedented. The end of the first quarter of 2020, the median house price was $322,600. The median price at the same point in time in 2022 was $449,300, an increase of 39.3% in 2 years, which is unheard of. Here in Frisco and Prosper, we saw the same thing. We saw home prices go up exponentially fast over the last 2 years. But here is where things get a little bit interesting. And he says when house prices drop, it's usually not by a huge amount. The counter example of that was 2006, when prices started running up rapidly, that resulted in the housing market meltdown. At that point in time, you had an enormous crash fueled by millions of people that lost their house to foreclosure, frozen credit markets, so money wasn't available to most, and lenders straight arming the entire mortgage market caused a nationwide drop in home values of 19%. Now, if you look at that to what's being forecast this time, again, it's all over the map on what people are forecasting, but 5 to 10% is still the most common forecast I have seen peak to trough in most cases. You may already know from previous videos, we'd already dropped 14% in Frisco and right around 13% in Prosper. But here's where it's interesting. He said, if the same fall happened again now, that would bring the median house price back to $363,933. That would still be almost 13% higher than the median price at the end of 2019. And unlike after the Great Recession, lenders have been far more careful. There isn't a massive wave of foreclosures waiting to happen. No investment banks are sitting on worthless derivatives, financial paper, basically, that's going to make things come crashing down in anywhere near the same way. He also goes on to say that first, the country still has a chronic shortage of homes. A gap of millions of units, as not enough has been built in the last 15 years to keep up with the needs. Home builders could try to address that, but they can't sell off the homes they now have fast enough. So planning on constructing more going into next year doesn't make sense. So let's break that down just a little bit here. It brings up a couple of important points there. And again, we have seen home prices fall locally in this market, and I do expect that we still have a little bit of room to go. Prices in both Frisco and Prosper have stabilized, though. We've actually kind of been treading water. They haven't really gone down. Now, in the last 6 weeks, they've kind of been holding fairly steady. And with that in mind, that's an interesting thing this time of year, because normally once we go past Halloween, all the way into January, the market here goes very slow. We don't usually see a lot of ups and downs in any activity. It just kind of goes dead. The market becomes frozen to a certain extent, and we normally see prices trend down all the way through the end of the year, and we're not seeing that right now. But we are continuing to see inventory fall. As a matter of fact, I saw a report just this morning talking about land acquisition in the DFW area. And the land broker was basically saying it's the slowest he's ever seen it. Most of the major home developers already have enough land on the books and or are canceling contracts that are future because there's already enough in the pipeline that they see to satisfy what will be demand in the months and the year ahead. So with that in mind, it raised a lot of questions. I mean, so should you consider buying? Is now the right time? Should you wait another 6 months? And that's a question that only you can answer. There isn't a right or wrong answer that's universal for everyone, because everyone's situation is unique and different. What I can tell you is that if you're in the market for new construction, the builders are offering some great incentives, between now and the end of the year. They're offering lower interest rates. They're offering discounts off of pricing. And we're also seeing the same in the resale market. although not quite as much because, like I said, activity this year generally slows, and we're seeing it. As a matter of fact, in the last 7 days, only 21 new homes were listed for sale in Frisco and only 5 in Prosper. Also, only 22 homes went under contract last week in Frisco and only 4 in Prosper. Yes, it was Thanksgiving week. Yes, those numbers are a little lower than normal, but it just kind of shows that this is definitely the slower time of the year. And if you're comparing it to last year, that's where it doesn't really apply, because last year, right now, things never slowed down. It was still absolutely on fire, which we're not seeing right now. We're seeing a much more normal pattern, and we are definitely starting to see things stabilize here in Frisco and Prosper. Again, as most of you know, or if you don't, please see the description directly below. I have a link to the Frisco market report. The information is updated every week. You can also check out Prosper or Little Elm or McKinney or Plano or any of the areas around. As a matter of fact, you can search any city or zip code in the entire country from that report and see the most up-to-date information for the market or zip code that is most relevant or important to you. So again, remains to be seen exactly what will happen, but at least here in North Texas, we're starting to see some signs of stabilization. It's going to be different, and every market will be impacted in a different way. And obviously, much depends on what goes on with mortgage rates going forward. So hope this information helps. If you have any questions whatsoever, or there's anything you would like more information on, please don't hesitate to reach out. You can always send me an email at contact@theandrewsmichteam.com, or feel free to call me at 469-296-5230.